High salary earners should not invest like the others for them to become wealthy. If your income is above 1 million naira per month, you are a high salary earner. Less than 5% of Nigeria fall at this income threshold. Remember that your salary cannot ultimately make you rich. So why do some people in Nigeria keep getting richer while others stay stuck no matter how much they earn? It is not luck, it is not even just their salary. This is the type of investment they go into and the level they have reached. In this video, I will show you the exact investment products high income earners use, how their portfolio are structured, and the step-by-step ladder to climb to achieve wealth. If you have ever wondered how to invest your salary to become rich, this is it. I will divide this video into 4 parts for context. Part 1, you should structure your money. I've noticed that the wealthy do not just put their money in one place. They divide it into 4 layers. They structure their investment for stability, for income, for growth, and wealth expansion. So if you are only using one of these layers, you are already behind. Now let us look at some products to layer our structure. Number 1, fixed income. This is your foundation. This is where you should protect your money. Here you are investing for stability. You want to prioritize capital preservation, low volatility, and consistent income over high growth. These days, savvy investors now have their emergency fund put in fixed income instruments, but they do it in different partitions. Examples of fixed income are: you have treasury bills, federal government bonds, fixed deposits, money market fund, and even your high yield savings account falls under fixed income instruments. You may want to ask, why should I start here? This gives predictable returns, low risk, and most of all, peace of mind. This is not where you get rich. This is where you slowly grow your earnings. Number 2, you go into stocks. This one is your cash flow engine. Stock market investment is where income meets growth. So here, you are merging 2 layers, the income layer and the growth layer. Here you are buying slices of top Nigerian companies like your MTN Nigeria PLC, your Zenith Bank PLC, your GTCO, and so many others on the Nigerian exchange. These companies pay dividends. So dividends are portion of profits from a company that is distributed amongst its shareholders for their long-term holding of a particular stock. So they grow over time. So there is capital gains on you holding a particular stock. So when you match your dividend payment and capital gains that you get from holding that stock for a long time, this ultimately builds long-term wealth by reinvesting your proceeds from holding that stock. This is where you start building monthly income from stocks as a high salary earner. Do not be carried away by the hype to put a large chunk of your cash in meme stocks by FOMOing, that is fear of missing out. When you see a particular stock rallying high, then you want to join the bandwagon to also enjoy from the rally of that stock. That is FOMO, fear of missing out. This is a portfolio spoiler. Number 3, real estate. This is your wealth multiplier. Now you are moving to serious wealth. This is the sole or part ownership of land, building, and other facilities. Real estate investments that build serious wealth are the ones that create cash flow in your portfolio. I'm talking about rental property, commercial building, land banking. The rich loves this one because it's a hard asset. You can see it, you can feel it, and you can touch it, and it carries your name. So you may ask, is it necessary that I own real estate properties? The answer is absolutely yes. This is because it gives passive rental income. So if you own some properties that they pay rent either monthly, either biannually or annually, it affords you the cash flow to keep getting cash based on that time span. Also, it gives you property appreciation. So one of the characteristics of real estate is that its value consistently go high no matter what is happening in the economy. The value rarely goes down. So by so doing, by holding a particular piece of property over time, the value appreciates and it creates more wealth for you in value. The third one is that it protects against inflation. So real estate is a standard inflation hedge. You own your property even though the cost of goods and services in the society keeps on skyrocketing. Your real estate property also shoots up even much more than the inflation rate because it has value. It's a physical asset that commands valuation. So you can see that real estate takes all the layers of the investment structure. It is for stability, income, and growth. Then wealth expansion. This is where Nigerian billionaires are made. Number 4 is alternative investments. This is the secret level. This is what separates the rich from everyone else. Alternative investments are assets that don't fit into traditional categories like your stocks, like your bonds, and etc. They are increasingly used to stabilize portfolios against geopolitical uncertainties and persistent inflation. After your investment portfolio grows to a substantial level over time, you may want to reduce your exposure to traditional investments and keep some raw cash aside to look into some alternative investments. So examples of alternative investments are startups. So startups are new business that has not really gotten any form of structure yet. So if you have some cash on your side, you can put it into that business, give it more structure, boost its operation so that that business can scale and become profitable. And you make so much money from investing in that startup. So another one we have is private equity. So private equity is similar to startups. It is you buying stakes of an infant company. You invest in that company, you finance the company, you give it the structure that it needs to reach its potential. Then afterwards, you can sell your stakes after the company have gone public. That is how you profit from companies. So the next one is private credit. So here you have large cash in your reservoir to more or less loan a company, either an existing company or a struggling company, to bounce back. And all the terms and conditions concerning that loan is properly spelled out and an agreement between both parties. So you fix the rate you want to gain from that loan that you are giving out to the company, and at the end of everything, you make very enormous amount of money from that venture. Another alternative investment is emerging business idea. Somebody might come up to you with a very promising idea. The person might lack the knowledge or experience to put that business into a feasible operational activity. So with you having some large resources in your reservoir, you can look at how you can hire people, how you can get professionals. You so much believe in that business idea. You will be the anchor of the business, partnering with the person that has the idea for that business. So both of you can work together and scale up that business, and it becomes very profitable over the long haul. Alternate investment is where 10 million naira becomes 100 million naira, and 100 million naira will become 1 billion naira in the long haul. But here is the harsh truth. Most people never get to access this level. It takes so much to break even this layer to pilot a business successfully. Here, your wealth can expand astronomically. If you can relate to any of this and you are getting value from this video, please hit that subscribe button now, and don't forget to like and share this video with that person you know that needs to see this. So now let's get back to the video. So the fifth investment product is global investing. This one is next level. This one is for the top dog. It is also for wealth stabilization and expansion, but on different economies. Smart investors do not keep all their money in Naira. At a particular stage of your investment journey, you should invest in solid global economies like the United States stock market, the United Kingdom Stock Exchange, the Canadian Stock Exchange, dollar assets, etc. And also offshore opportunities. So offshore opportunities focus on jurisdictional alignment to optimize tax, privacy, and asset protection to know the efficient region for your wealth. You may want to ask why you should invest in this category. Well, it protects you against regional inflation. You might remember the level of inflation that we experienced in this country 2023 and 2024, right? So if you have your wealth stored in other regions or in other currencies, such inflation will not impact the wealth. It also protects against currency stability. So as a result of inflation in a particular region or country, currencies tend to take a nosedive. So by investing in global economies, right, you will stabilize your currency from local currency volatility. So this investment gives global exposure on investment, right? You have the opportunity to invest in other countries' markets that is stronger than your residing country. So let's jump into part 2 now. Part 2 is the ladder to climb to become rich. This is the part nobody wants to tell you. Let us break this down into 4 simple steps. Step 1, you have to save to invest. So the only reason you are saving is to invest. It's not to store, it's not to hold, neither is it for you to keep under your mattress. So for a start, you should save between 30% to 50% of your monthly salary, right? So this is you attacking your investment aggressively. This is possible as a high salary earner. You will save this amount in 6 months. That is, if you are saving 50% of your monthly salary, which is 500k, by 6 months you save up to 3 million naira, right? So the goal is to build a 3 million naira portfolio at the start. So this will be your emergency fund, right? This is what you are going to partition to invest in different types of fixed income instruments. Number 2, you own assets. So after a while in your investment journey, you have to know that you should stop just investing in other people's company or other people's business. It is high time you need to start owning yours by buying businesses, real estate, and other forms of investment. Step 3 is scale system. This is the transition from manual individual asset management to a structured, automated, or professional framework that can handle larger volumes of capital without increasing operational risk, right? That is human error. This will expand investments faster. Step 4 is capital allocation. This is a decision-making framework for deploying available cash towards the highest and best use. It is basically strategically distributing financial resources. Now, you don't work for money. Money works for you. So now, let's jump into part 3 of this video. We'll look at what most salary earners get wrong about investment. They chase quick money, which leads to falling for scams. You see and hear them every day. Double your money in a month and so on. You should flee away from such venture. So another one is investing without income. This one is like putting your money in a rabbit hole. It never ends and nothing comes out of it in the end. So another one is putting all your money in just one asset. This one is as a result of poor investment management. No matter how promising that company is, even if it has a 100% of not ever failing, right? You never allocate more than 40% of your portfolio into a single asset. Diversification in investment is key. That is why many high salary earners never break through. So in conclusion, if you follow this path, 10 million naira per month becomes possible. 100 million naira portfolio becomes achievable, and financial freedom becomes realistic. So the real question is, as a high salary earner, are you building different sources of income or just surviving? Comment level up if you are ready to grow your income. Put that in the comment section for me. So if this video opened your eyes to something new, please like this video. Also subscribe for more finance and investment strategies. So if you want to know the asset classes that the rich are diversifying their portfolio into, please kindly watch this video over here. As I say, wealth is not luck, it is made from information followed through with execution.